Here are 3 reasons why to subscribe to Fridge Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we're going to be doing a trading ticker challenge update. Couple huge trades that we're making here. So if you're excited for today's video, as always, make sure that you smash the thumbs up button, subscribe to the channel if you've already done so, and make sure you turn on the bell notifications. I have loved all of your support so much. In case I do not say it enough, I know you're tired of me saying it, but your support has been absolutely awesome, and I will continue to make this amazing content hopefully for you guys. So in looking at the trading ticker challenge, we have a lot of things to talk about here. First things first, I'm recording this and the market is just closed. It's 4:43, and look at that nice return here, and you already know where most of it came from. It's Tesla stock. Tesla has shot up a crazy amount today. Am I still down? Yes. Don't laugh about it. But the nice thing is we closed over $200 today, which is, I think, is a huge level. Those psychological numbers like 200, 250, 300, you know, it's nice that we closed above $202 here. Still holding it for the long term, which is great. And I'm still down year to date, $48 per share, which actually equivalates to $4,800 in my position on Tesla for the year. So before you look at my year to date and say, Fridge, you're down $800. Take away the $4,800 from Tesla, I'm up $4,000 right now. So I'm not really complaining right now. I'm hoping that Tesla has a nice, little rise for the next couple weeks. I'm looking at cashing it out. If you don't already notice, over on the right-hand side here, I did close my Tesla position. I closed it when it was down at about 180 with my covered call. Which was a great move when I'm looking back on it, because the covered call wouldn't be worth as much today as it was before. I want to see if I can even find it. Sell covered call. It was for January 2025. And here it is right here. So I was able to close this one. I bought this position back for, I think it was $1,300 or $13 per contract. And now it's up at $20. So I would have had to pay an extra $700 for this contract right here. So yeah, I closed it, and it was a great job for me on this part. I might open up another covered call. I'm not really quite sure yet. I kind of want to see what's going on with Tesla. Maybe go a couple weeks out and do a covered call and maybe get some extra premiums. But in looking at the Tesla position before I get into all the other trades, even though I'm down $5,500, I've made about $3,000 back, give or take. I don't know the exact number, but maybe about like $3,000, I think. So I'm actually down like $2,500. I know it's still a lot of money, but you gotta look for the bright side of things sometimes. But anyways, so crazy day in the market today. I'm up over $1,200 year to date. I'm down, but I was down like $3,000. Now I'm only down $800. Thank you, Tesla. Over here on the right hand side, you can see there's a couple new trades that I opened up today when I'm recording this. I opened up one the other day as well. So in my previous video, I talked about how I was being bearish on the market of February based on previous data here. And for a little while, I mean, it's not terrible, but I definitely maybe could have sold it earlier off. We had CPI data right here, the 13th. Came in way too hot compared to what they were expecting. Not way too hot, but it came in hotter than expected. So inflation wasn't going anywhere yet, which decreased the possibility of rate cuts for the year. SPY sold off, went down to here. And then it's had a little bit of a rally ever since. I know that today we had the unemployment. We also had consumer spending, I think, was also one of the things. So a lot of data came out today. And SPY was up 0.7% on that one, which, I'm looking at 504 as the, closing under that, give or take. And right now it's getting kind of close to it. But what I did in the meantime was that when we had like it was like a 1.3 or 1.5% sell-off, I opened up a SPY 505 $500 put spread for the end of the year. Now, the reason why I did that is because if you watch one of my earlier videos, the point being is that they said that, based on historical data, if January has a 2% plus, month in the green, the markets tend to return positive for the rest of the year. So that's one thing I looked at. We also have an election year. The election year also tends to return an average return in the positive because everyone's getting hyped or excited about the new president. There's campaigning going on and those kind of things. So what I did was when the market sold off, it was like 1.7% or whatever, I opened this up, which as you will see, does it say it on, right here. It's not a date. Right here. February 13th. That's when it sold off. It sold off, and I opened up this put credit spread here, basically saying that SPY by the end of the year better close above $505, which it's not too far off. It's already at 502. So I open up the spread here. It's worth $201 in premium for $500 in collateral. So I'm almost getting about a 50% return on this trade, and I'll show you the spreadsheet afterwards. But this is kind of like almost what's called a hedge. A hedge basically is that when you have different positions opening up where one is for the stock and one's against the stock. So as you can see here, I have two trades here. This one has been that it'll go down in February, but this one has been that it's going to go up for the rest of the year here. So I opened this one up as a hedge, and so far I'm up $28 on it out of 200. So I'm up a percentage of 14% in 2 days. So being up $28 there, being down 60 here, instead of being down 60 entirely, I'm only down like 32 on SPY so far. So my focus behind that is to hedge my bet. So in case SPY still has a great month for February, I still have this option here to outweigh my negatives. The max loss I can have here is like $160, and my return here is $200 and something by the end of the year. So I'd still be green overall on these two trades here. That's the first thing. The second thing that I did is I rolled over my Xpeng trade again. Now I keep rolling it, and I know you're like, oh my god, why do you keep rolling it? But this one, as you can see, I opened up 2 hours ago. I did this before I left work, and I rolled it over where basically I closed my current position right here for $1.41 for each contract, and this one was originally worth a little bit less than that, so I had to pay to close it. But then I open up this new one for $2.12, which gives me that limit price of 71 cents, which is the difference between the two prices here, which equates to an extra $71. And not only did I give myself an extra $71, I also reduced my strike price by $50. Instead of being at $10.50, I'm at $10. So I reduced my strike price, I reduced my risk, and I gave myself more premium on top of it. Now, the only downfall to this is that it goes till June. So about 4 months out here. So I pushed it out to make it a little bit farther, but again, that's okay. My break even is 7.88, and you can look at the chart here, and not this one. Where's the actual chart here? Go to the next. So you can see that it actually bottoms out around like $7 or so. So the fact that I'm actually like reducing my risk down to that all-time low down here, and also again down here, just really reduces the risk here. So I gave myself an extra $70 in premium, and I got $50 back in collateral because I brought my strike price down from $10.50 to $10. So I'm excited I was able to do that one. It is hopefully going to turn out well for me in the future. Only time will tell, of course, but fingers crossed that it is actually going to work. So that's that trade there, down $1, but whatever. My last one is Penn Entertainment, and I've been posting about this one from before, and I know I've said it before. They had their earnings this morning, and they bombed. I have never seen a notification where it says they missed by like 200% of their estimates here, which is nuts. So what does it do? Of course, it's down 14%. This contract here was in the money before this opened up here, because my strike price was $22.50, right? So here I am right here, living life. I'm getting ready for work. I'm like, all right, this is chilling. Earnings, and it's just down. It's down quick, and it's sold fast. I think they missed everything across the board for it, and this would have expired tomorrow. Let me see if I can pull it up here. Let me go back to my actual trade here. This would have expired. Where is it? Filled today. This is going to expire tomorrow. And I'm almost certain, I haven't tried it yet, but I'm almost certain that if you have the last day of your option, I don't know if you can roll it over if it's the day of expiration. So what I've done is I rolled the day before just in case. So what I did is I rolled the strike price 2250, 2250. I kept the same strike price here. I rolled it out till June, but it does in fact give me an extra $94 in premium here, which I know is like, but you're rolling it out for 4 more months. That's definitely true. But when you look through like what Penn is doing after that earnings report and everything like that, you know, I still have high hopes for them as a company because again, they're one of those ones in the sports gambling industry and everything else. It looks like they might be doing like maybe they could be doing like, you know, a revamping up and rebuilding from the foundation. Only time will tell, of course, with that one, but I'm still, you know what, I'm still okay with it. And, you know, worst case scenario is that now my break even is down at 1830. So instead of being at 2250, give or take, I'm at 1830. And you can look at the stock price here, you know, it went down to 19. It was down at 1891. And I kind of had that little bit of a rebound towards the end here. So I rolled it over. I gave myself an extra $94 in premium here. So as you will see as a result, here is the active spreadsheet with the active trades. Again, right now, this one is definitely the negative. So I'm not going to be looking at that one just yet. That one isn't fully there. So the ones in the blue are the ones that are still open for whatever happens here. But I was able to add in that extra income, that extra premium on XPeng. I'm now making $119 on 1,050, which is an 11% return in 6 months. That's not even too bad. If I did another 6 months of that, I'd be up 22%, which is beating the S&P 500. Penn Entertainment, it would be 8.62%. Again, for 6 months, not too bad because in the next 6 months after that, it'd be like 17%. And this is the trade I just opened up with that SPY hedge that I have as a put credit spread, $500 collateral, $201 max profit, so which will give me about a 40% return. So with these trades not being closed, these are the active premiums I have. And as you can see as a result, we're sitting basically, if these all go the way I want it to go, which not all of them will, obviously I'm going to take losses along the way here, but I'm sitting at still a decent amount of money right now. I would be up 6.07% obviously in June, because these are going to expire in June and everything else. But, you know, I might take profit earlier and see what happens. But with these trades right now, say that I do nothing else till June, like nothing at all. If I do nothing else until June, I would be looking at 6 months of return at about 6.07%, technically 7.78% after or before taxes. So I'm still on track with these trades to be hopefully beating the S&P historical average of 10%. So I'm excited for these trades. As you notice, I'm not trading a crazy amount. I'm just saying, okay, I'm going to open this up. I'm going to roll it. I'm going to open this one up. I'm going to just let it go, whatever it is. You know, I'm sitting at about 513 in buying power. Obviously, there's a lot of that between the collateral. These all the collateral's gone here. So there was one thing that I wanted to watch, and that was Sirius XM here. Before we leave today, of course. So if you go to SiriusXM, they had a crazy little bit of a sell-off here. I think their earnings were a week before, which is really interesting enough. But so they had a crazy sell-off. They're down 2.03%, down 7% in the last month, down 12% in the last 3 months. So down 11% for the year. They kind of basically trade sideways, as you can tell. They don't really do much to like this a lot of volatility here. So here's what my thinking was. I noticed that this was a thing. If I put a put credit spread, which again, I only have $500 in collateral here. If I push one out until September 20th, now again, that's a crazy amount here. A trade I can open up right here be a $4.50 put, cash secured put, which will give me about $150, maybe $130, because the spreads are a little bit all over the place right now. They're a little wonky. Be looking at, you know, possibly $130 for this contract here. If I was to go into here and open this up, which I'm not going to, of course, but just to show you how the numbers are going to work here. So here's Sirius XM here. So again, say I did a put, cash secured put against it. My collateral that I would have would be $4.50 times that, which would be $450. My profit or my premium would be, I think it would be filled in a little bit less than that. So it'd probably be like, even like, you know, 120 maybe. Say we even call it 120. I'm still looking at a 26.67% return in just this one trade. So in theory, if I put all my eggs in this basket right here and I did 450, you know, say I did it 4,500 times and I made $1,200, I would already be sitting at way above the S&P 500. So just things to consider. I'm watching SiriusXM right now to see what they're going to do here, but obviously that's not there right now. So we're sitting at about 6.07% after taxes, which is great. You know, so the portfolio is hopefully on the rise here. As you can see, we had an amazing green day here. I'm really hoping that we start to turn the portfolio around here. If you made this fun, the video, of course, as always, thank you so much for your continued support. If you like this video, make sure you smash the thumbs up button. Subscribe to the YouTube channel if you've already done so. If you're wondering what it looks like, here's my YouTube channel, of course. Here we go. Look at this amazing channel. 53 amazing subscribers. The videos have been doing absolutely awesome. 25 views here, 200 views here, 43 here, 47. Am I like the financial guru? Absolutely not. But, your support has been absolutely awesome. Thank you so much for watching. I hope you guys are making money in the market. And I will see you guys in the next video.